We've had the biggest rise in tariffs since the 1930s. Lots of predictions, including from us, of serious trouble ahead. In fact, you, Henry, really worried about it. I want to embarrass you and remind you of your TikTok, Instagram success, which I think reached 7 million people. But let's have a look at you here complaining after Liberation Day about President Trump's tariffs.
President Trump's tariffs are one of the most harmful and unnecessary mistakes of the modern era.
So dismissive.
So you were pretty unequivocal, but you know, here we are 7 months on nearly. The US economy hasn't crashed. Were you wrong?
So I don't think so, and I would stand by what we said what I said in that video for a few reasons. One is that the tariffs we have in place are very significant, the highest in 90 years, but they're not actually anything like what was promised on Liberation Day. And I think we've got a chart on this. So if you look at the top line there, that's what economists are saying is going to happen to the US economy after the announcements by President Trump. And you can see that in April, it absolutely spikes up. But, of course, markets reacted badly. The administration pulled back somewhat. There have been trade deals. There are big exemptions in place for different countries, so the tariffs only apply after a certain amount. There's evasion. Supply chains have adjusted. So if you look at the red line at the bottom there, which is the actual rate that's been imposed, calculated from the revenue raised at the border, yes, it's a big shock, but it's significantly lower than after Liberation Day.
But that's point one. That is so striking. Just before you go on, that's really striking because, you know, the overall one is lower than was promised. We thought it would be in March, but then the actual amount paid is much lower than that. I mean, is that because people are just, you know, evading tariffs? I mean, how come it's so much lower?
I think there's a little bit of evasion going on. There's also the avoidance effect, which is just supply chains reorganizing, but it's also because there are a lot of these exemptions that have been granted by the administration, whereby the tariff only applies after a certain amount, and those have been negotiated gradually over time. And so you do end up with this gulf, certainly, between what was promised on Liberation Day. And had that gone into effect, I think we would be looking at something
one reason is the actual tariffs are lower than anticipated, but also they haven't been passed on, right?
Yes, not to the same degree yet. The pass through to consumer prices has been slow, and that's not because foreigners are paying an enormous amount. It's because US businesses have been willing to absorb tariffs in their margin. And this next chart we've got is the estimate this week from Goldman Sachs' economists, which shows this breakdown, 51% of the tariffs so far absorbed by businesses in their margins. And I think part of the reason for that is that the tariff policy has been so chaotic and unclear that businesses have been trying to wait it out to a certain degree.
So far, you know, it hasn't, I guess, been the tax on consumers at least as much as people had feared. But is that sustainable? Can businesses carry on swallowing this in their margins? And if so, shouldn't that be hitting their stock prices?
Well, that's a good point. Of course, the stock prices are driven more by the tech firms than by the importers who would be directly affected by the tariffs. In general, the amount that's being passed on to consumers is ticking up over time. And I think eventually in Trump 1, it reached something in the region of 80%. I think it might not get that high this time for a variety of reasons, but I still think it's going to go higher than this. But even at this level, I think consumers are noticing it. There has been an impact on inflation as well.
Okay, we've had our economic orthodoxy. Thank you, John. Tell us about the politics of this. I mean, we had a really interesting conversation this week with Governor Andy Beshear, who came in to see us, the Democrat governor of Kentucky. He was pretty unequivocal about how bad tariffs were.
He said to us that it was the worst economic policy he's seen in his lifetime. And he cited the fact that the two Republican senators for the state of Kentucky, the Commonwealth of Kentucky, Mitch McConnell and Rand Paul, are both very opposed to tariffs. I mean, the story he told, which I found pretty persuasive, was less about the consumer and more about what it was doing to businesses. That Kentucky is a big car manufacturing state. People don't think of it as such, but it is. And of course, the Trump tariffs have made supply chains really complicated in the auto industry. And also he was explaining that for a lot of, medium or small businesses, just the uncertainty around the cost of their inputs is making life very hard for them. I mean, he described a construction project that was maybe going to go ahead in the state or maybe not, where the people behind it were not sure whether it would cost $1 billion or $1.3 billion, and the uncertainty there was around the cost of the inputs, and they just couldn't go ahead on that basis.
It is having an effect. I think it's having an effect on consumer sentiment. I also think that business leaders are being remarkably quiet.
They want to keep their heads down. There's no upside to them as far as they can see of, standing up and saying this is a disaster for us, because they're worried they'll just get thwacked.
So let's bring in resident Uber optimist here. Are you as upbeat about tariffs? Do you think that they will continue not to have such an impact, or do you think this is more problematic for the US in the medium term?
Well, I'm much more worried about tariffs. I'm gloomy about tariffs. And there are two reasons for that. One is that I just don't see how you get rid of these things. Partly because when companies adjust to the tariff protection, then they don't want to give it up because it represents a cost to them. The other is that if you look at the history of negotiating away tariffs, it requires you to build a domestic consensus where you give some groups, interest groups, tariff relief, and you protect and you give others gains in foreign markets, and you try and match these things up to build domestic support. Well, one of the reasons tariffs haven't been so damaging is that there hasn't been much retaliation. So tariffs abroad remain very, very low. What is there to negotiate with? The other thing that Trump has done is not just put up tariffs, he's also basically got rid of most favored nation status, which means there is no anchor to US tariff policy at all. It's completely arbitrary. Sometimes you see him imposing a tariff on Brazil, sometimes on India. This week, he's threatening huge tariffs on China. That uncertainty, while there is no anchor, no MFN that acts as a discipline, means that there's a kind of randomness and arbitrariness to tariff policy, which makes it completely unpredictable, and that acts as a constant weight on US.
Go ahead.
Can I make one more point as well, which is I think we have to be a bit careful saying, it doesn't seem to have had much impact. In the first half of the year, the US economy grew at an annual rate 1.1%. If you ignore the 2020 pandemic, you have to go all the way back to 2012 to find a half that's as weak as that. So you do have a growth hit from some combination of these policies. You do have an inflation bump. And it's roughly in line with what you might have predicted in April if you'd said the actual tariffs are going to be half as big. So you combine that short-term hit, which I do think is visible, with your point, Ed, and I don't think that's a happy picture.
And the other thing is that the real measure of how much harm this has will be the counterfactual of what growth would have been sustained over many, many years. You don't have to have a recession this year in order to think that this is a bad policy. It's the lost opportunity that I think will be immense.
You're preaching.
I know I'm preaching
to the choir. I started as trade correspondent, 25 years ago in the Economist.
A job I did too.
I absolutely,
it stays with you.
I absolutely. But I do think it's important to spell out, because there are a lot of people who say, well, people like you, The Economist, were saying that tariffs were going to be catastrophic, and they haven't proved it. But I think your point, one, that actually, if you look carefully, you can see some damage. Two, firms have swallowed a lot of the tariff, but that if they're here to stay, they will eventually get passed on to consumers. But I think sort of two important points that you make that really are lost in a lot of the discussion is, one, because the rest of the world hasn't retaliated, then actually the best way to think about it is this is the US essentially building a fortress around itself. The rest of the world will continue to integrate and have a much more competitive market without tariffs. So over time, that damage to the US will rise. And secondly, the political economy. And John, this is for you then. Ed is arguing that because tariffs have risen now, it's going to be very, very hard for any subsequent administration to bring them down. The Democrats, traditionally more protectionist than the Republicans. Can you see a major push for bringing the tariffs down?
What tends to happen is you get a thermostatic response. So whatever Donald Trump was in favor of, if Democrats win next time, they try and do the opposite.
Oh, really? You think they'll be in favor of tariffs?
But big caveat. I mean, we're all scarred by our past jobs at The Economist. One of mine was as Brazil correspondent. And there, I just spent a lot of time talking to pretty protectionist economy, by the way. I spent a lot of time talking to companies who are lobbying very energetically to keep tariffs in place because they didn't want the competition coming back. So I think once you've created these tariffs, you have some very sort of concentrated interests who want to keep them in place, and that's a big thing. And the other thing is you create a government revenue stream, which Henry is Mr. Fiscal at the moment, but then suddenly you have to replace that. So say if you settle around a 10% tariff or something like that, you get some pretty meaningful government revenue. So I do think the politics have switched. The Democratic Party now seems to be the more pro-trade party, and that's a change. But I kind of agree with the consensus. It's hard to go back to the previous world.